Hey, what's going on everybody? Welcome back to the channel. I'm Waller's Wallet, and in this video, we're gonna take a look at Fidelity's zero cost index funds, which as the name would suggest, have no fees, and see if these very cost-effective funds are worth the spot in your portfolio. Now, who wouldn't like to have an index fund without paying any expense ratios and have no minimum investment requirement? And that's exactly what Fidelity's zero cost index funds do. They offer a way for people to buy these funds with no fees or minimum, which might be exactly what you're looking for, but these accounts do have their pros and cons. Now, if you want a simple way to help out the channel, consider hitting that thumbs up button. Also, don't forget to subscribe to the channel and turn that bell notification on as well so you don't miss out on future videos. Now, unlike some other index funds, you can only buy these zero cost index funds from Fidelity's website. You can't buy them anywhere else, even at an additional fee. So if you're interested in these funds, you would need to create a Fidelity account. Now, Fidelity offers 4 different zero cost index funds. FNILX, which is their large cap index funds, which corresponds to the large cap US companies. FZROX, which has a broad range of US publicly traded funds. FZIPX, which is made up of small to mid cap US companies. And FZILX, which corresponds to foreign and emerging stocks. So you have quite a bit of coverage and diversification with these funds. But let's take a look at the makeup of these funds and see how they perform. And to do that, we'll have to compare them to other funds. So we're going to be comparing them to their Vanguard counterparts, since Vanguard funds really are the gold standard. But now, what is the makeup of these funds? Now, FNILX is made up of 516 stocks, and the top 10 stocks account for a little over 26.5% of their holdings. And FZIPX is made up of 1,928 different stocks. And their top 10 holdings make up about 5.8% of their holding. Then FZROX is made up of 2,442 different stocks, and the top 10 holding makes up about 23% of the overall portfolio. Then FZILX is made up of 2,126 stocks, and the top 10 stocks account for just about 11% of its portfolio holdings. So all of these funds are pretty well diversified, as you would expect. Now, do they pay out a dividend? I mean, a fund with no fees, paying a dividend would make these funds just a little bit better, right? And the answer is yes, they do, which is great, so you can compound your return over time. But how often they pay out their dividends is different from other funds. Now, all the Fidelity Zero Index funds pay out their dividends once a year in December, which reduces your ability to reinvest those dividends throughout the year. And that can hurt your ability to compound your investments. FZILX has a dividend yield of 1.55%. And in 2020, the dividend paid out just under 19 cents per share. Its Vanguard equivalent, VTIAX, has a dividend yield of 1.98%, which is higher than that of the Fidelity Fund. The dividend yield for FZROX is about 1.2%, and in 2020, the dividend paid out just over 17 cents per share. Now, its Vanguard counterpart, VTSAX, has a dividend yield of 1.34%, and that pays out its dividend quarterly. FZIPX has a dividend yield of about 1.2%, and it usually pays out once a year in December, but in 2020 there were actually 2 payouts in December. One was just under 14 cents a share, and the other was just a little over half a cent per share, making it a total of 14.3 cents per share. And its Vanguard equivalent, VEXAX, has a dividend yield of 0.95%, and it also pays out its dividend quarterly. FNILX has a dividend yield of about 1.15%, and in 2020, the dividend paid out was just over 16 cents per share. And its Vanguard counterpart, VLCAX, has a dividend yield of about 1.39%, and this Vanguard account also pays out quarterly. Now, looking at the dividends per share, it may not be eye-popping, and that's because these funds at the time of recording are all under $15 per share, so it's not going to be huge payouts due to that reason. But in comparing the comparable Vanguard options, many of the Vanguard yields are higher and they pay out their dividends more frequently. But you know what? How have these funds performed? And that's the important question, right? Because even with no fees, if the performance isn't on the same level, then it's really not worth it. Because Vanguard fees are so low and very reasonable to begin with. So paying the small fees, it could be worth it if Fidelity's funds don't perform. Now the thing about Fidelity Zero funds is that they're so new. They've only been around since late 2018. So as far as the historical data, there's really not a whole lot there, which doesn't mean they won't perform well. What we're able to do is compare the returns we currently have for these funds to comparable funds and see how they compare. You can also check to see the year-to-date return to see how it's performing against those funds at the moment. Now, Vanguard funds are extremely popular and they're really considered the gold standard. So if you want to be the best or even be put on that level, you need to be compared to the best. Now, Vanguard's equivalent of Fidelity's FNILX is VLCAX, which is Vanguard's large cap index fund. And VLCAX has 560 stocks in its portfolio compared to 516 stocks in FNILX. And the top 10 holdings are pretty much the same. Plus, the allocation percentages for those top 10 holdings are about a 1% difference. So from that perspective, these funds are pretty similar. Now, FNILX has a one-year return of 19.66%, which is awesome. And VLCAX has a one-year return of 19.68%. So they basically have the same return. And as far as year-to-date return, FNILX is sitting at 4.31% and VLCAX is at 4.64%. So VLCAX is slightly ahead of Fidelity here, but the returns, they're comparable. Now, VLCAX does have an expense ratio of 0.05% and you need a minimum requirement of $3,000 to invest in this account. Then for FZROX, the Vanguard equivalent is VTSAX. Now, VTSAX has 3,640 stocks compared to only 2,442 stocks for FZROX. That is roughly 50% more stocks in VTSAX. But when looking at the top 10 holdings, again, they're pretty close as far as allocation percentages, with VTSAX top 10 holding about 23.6% and FZROX holding about 22.7%. So less than 1% separates them. Now, FZROX has a one-year return of 20.28%. In VTSAX, it has a one-year return of 20.68%, so VTSAX is slightly ahead here. Then for year-to-date, FZROX is at 5.56% and VTSAX is at 5.77%. So VTSAX again is just slightly ahead. Now, VTSAX does have a $3,000 investment requirement and an expense ratio of 0.04%, just keep that in mind. Then the Vanguard equivalent of FZIPX is VEXAX. And VEXAX has 3,351 stocks in its portfolio compared to 1,928 stocks in FZIPX. So Vanguard does have more stocks in their fund, but when it comes to their top 10 holdings, there's actually quite a bit of difference between them, and of their top 10, they only share 3 stocks. Then VEXAX top 10 makes up 7.7% of the total portfolio allocation, while FZIPX top 10 is 5.81%. Now, FZIPX has a one-year return of 23.33%, but VEXAX has a one-year return of 36.78%. which puts Vanguard way ahead here over Fidelity. And a big reason could be the fact that VEXAX has Square as its top spot. And in 2020, Square went up something like 250%, and FZIPX doesn't even have Square in its top 10. But for year-to-date, FZIPX is sitting at 12.93%, while VEXAX is at 13.08%. So while the year-to-date might be comparable, VEXAX is still ahead of Fidelity here based on its one-year return, and Vanguard still has the edge even though that this fund has an expense ratio of 0.06% and requires a minimum of $3,000 to be invested in this account. Then the Vanguard equivalent of FZILX would be VTIAX, and VTIAX has 7,000 361 different stocks in its portfolio, while FZILX has 2,126. So VTIAX has roughly 3 times more stock in it. Then for their top 10, they both hold around 11% in their top 10 of their portfolios, and they pretty much have the same funds in those top 10 holdings. Now, FZILX has a 1-year return of 14.79%, while Vanguard has a return of 14.95%. So once again, Fidelity is sitting at the same table here as far as returns, but Vanguard is still just a little bit better. Then for year to date, Fidelity is actually performing better at the moment with a return of 6.33%, while VTIAX is sitting at 6.16% return. Now both of these are comparable year to date, but we see Fidelity leading at the moment. Now VTIAX has an expense ratio of 0.11%, and it also takes $3,000 as a minimum investment requirement. Now what's pretty interesting is the fact that the Fidelity zero-cost funds do a pretty good job holding their own against their Vanguard counterparts, even with a lower number of stocks in their portfolio. With the exception of FZIPX, that difference in a 1-year return was quite large. But outside of that, Fidelity funds were very close as far as their returns were concerned. So that is great to see, because if the returns are holding close to these funds, then I think a reasonable assumption could be made that this could continue, but it's not a guarantee. So should you be investing in Fidelity zero-cost index funds? Now, I think Fidelity zero-cost index funds are eye-catching because they have no fees, because we don't see any other institution offering that at the moment. And if you're someone worried about the fees or a minimum investment amount, you may be interested in these. Now, from a performance standpoint, the Fidelity funds do a great job keeping up with Vanguard for the most part. They really don't outperform them, but they are in the same ballpark. But a big negative is the fact that their dividends are paid out annually instead of quarterly. And this can have a larger impact over time as it comes to compounding your returns. Then since they're so new, how will they actually perform in the long run? Well, we'll just have to wait and see, but so far, it seems like they're on a good path. But that being said, if you're someone who's just getting started and you don't have a lot of money to put into the market, the Fidelity zero-cost funds are an option for you, as they're extremely cheap to get started and they have no fees. And you can use these funds to start building a diversified portfolio, and later on as you grow, you could shift to other Fidelity products that could benefit you more, or even maybe a different institution. But if you're someone who wants a more well-established fund with more frequent dividend payouts and even slightly better performance, then the Vanguard funds might be where you want to be. So let me know, would you invest in these Fidelity zero-cost index funds? Now, if you're someone looking to build a simple portfolio, then be sure to check out this video right here, where I talk about how to build a great investment portfolio using only 3 funds. And if you want to, you can also support the channel by taking a look at the links down in the description below. And if you know someone that would find this video helpful, then feel free to share with them, and I'll see you in the next one. Take care.